Hello, and welcome to another edition of Boomer and Gen Z Talk About the News. This is not so much of a different perspectives because we're going to be talking about something that's really unfolding rapidly right now, and that is the war in Iran. Now, as I said, this is evolving really rapidly, but we do know a few things about how these kinds of situations often unfold, and we'd like to share with you our thoughts, starting with that the duration of this conflict is really going to matter a lot. We don't know right now how long this thing is going to go on. There are so many other moving parts. A lot of times, markets respond and then they move on to thinking about something else. And something that's still really important fades from the headlines. I don't see that happening very quickly if it continues, because it's a conflict that the entire world foreign policy establishment, not just in the US, has been worried about happening for a long time. It affects Europe, the Middle East, Asia, any place that draws supply of energy from the Middle East. So the longer this goes on, the longer everything and the more powerful those trends and phenomena will get.
Yeah, that was one thing that happened in COVID, where we saw that compounding effect of the longer the duration, the further the supply chain fell out of whack. Where I think the statistic was like 1 day of disruption to a supply chain was a week or a month of actual implications throughout the supply chain. So if the ship sat in port for a day unexpectedly, then it would cause problems for a week to a month after that. We're probably going to see similar issues arise, especially we're going to get into the Strait of Hormuz. We're going to get into how the different players, who gets most affected, most likely India, China, Japan, and Korea, I think, are the four largest importers of oil from that region. So the U.S. might be slightly less impacted, but we'll definitely see the fallout across oil prices throughout the world and shipping prices, cost of goods, inflation. So there's definitely a lot to get into.
Well, it's really interesting you mentioned about who is importing the most oil from there. Interesting thing about oil is that there's a word that we use in economics, fungible, which means that oil in one place, or the price in one place, can affect the price in another place, even if it's not exactly the same good. Like you have different grades of oil. West Texas crude is a lighter oil than we have in Venezuela. I don't recall off the top of my head what kind of oil it is in Iran, but even though we're not importing, just because the world price goes up, American oil companies are going to raise their price because they are global in their reach. Exxon does more than just sell gasoline in the US. It's refining all over the place. It's exploring. It's doing all these different things. You mentioned the Strait of Hormuz. It's not just oil that comes through there. There's liquefied natural gas. Not so much produced by Iran, as I believe Qatar is the big producer in the region there. And LNG is really important to Europe. Winter's mostly over. Their demand really peaks in the winter. And so could have been worse for them. But Europe definitely has a big interest. They do have some oil supplies of their own with the North Sea, but they also import oil. But they're even more vulnerable on the LNG front than they are in the oil front.
Yeah, for LNG, I think it was Qatar not only has difficulties with the Strait of Hormuz and getting their liquefied natural gas out, but from my understanding, the retaliation from Iran and
Right.
the missiles being sent to various places, it blew up either a refinery or the port where it goes, the liquefied natural gas goes out. So there was a lot of fear. I think it was 25%, 15 to 25% was the number I recall of total LNG production comes from Qatar, and that is a large drop in supply for the world, we saw U.S. liquefied natural gas companies shoot up 10, 15% overnight on that news. So definitely the oil companies, LNG companies, natural gas, energy in general are big winners in terms of with less supply, they can definitely charge more for their oil.
Right. So states with the big LNG reserves, the Western Pennsylvania, Eastern Ohio, the Dakotas, will see definitely a pickup in economic activity in those regions. So with that, we're also going to see some inflation. We've seen prices at the gas pump go up already. And the thing is that while your local gas station can raise prices immediately, the producers of all kinds of goods that utilize energy, they will see their cost of production going up. And there is often a lag of inflation, kind of a second wave, when those goods that were produced with higher energy costs finally make it to the consumer. An example might be in AI companies. We have the recent phenomenon where these data centers are being asked to produce their own energy. I saw a little while ago that Elon Musk's XAI has its own gas turbines, and so increased demand around natural gas, diversion of natural gas for exporting LNG will probably raise the price of natural gas for all kinds of producers who are using it for their short term and manufacturing energy.
Yeah, the impact of inflation, I think the number one cause or the number one indicator of how bad it will be is duration of the conflict. You had mentioned that at the beginning of the video, and we've heard the term 4 weeks thrown around quite a bit. That was from the president himself. He said this is most likely going to be a less than 4 week war, I believe, and they didn't commit to a specific end date. We'll have to see how long it actually runs. I definitely heard a lot of financial analysts say, oh, this is going to be a short war, 4 weeks or less. And from hearing that from, I would say, 6 or more analysts that I had listened to, I would say that's likely the consensus in the markets right now, saying that this is going to be a short war. So that is what we're pricing into the markets. There's a possibility that it will be only 4 weeks or less. There's an equal possibility, or I don't know the exact statistics or probabilities between the two, but it could run for a long time. These disruptions could last quite a bit, and if they do last for an extended period of time, it could be very impactful at the pump, very impactful on AI data centers, very impactful on a myriad of inflation indicators, which we're not a political analyst, but might have impacts in the midterms later this year.
Well, especially if things continue through the summer, when people really notice gas prices when they're filling up the camper van that gets 15 miles per gallon, and they're like, well, I guess we're not going to Yosemite this year because it's going to cost us a lot more than we thought. There's different sensitivities to different goods going up at different times. And for gasoline, it's kind of the summer travel season. And of course, jet fuel is also another thing that goes up. And so people will be seeing their airline ticket prices going up. So if it does last into the summer, then it could have a impact on the midterm elections, just because people will remember. The closer things happen to those elections, obviously, the more people remember them, and the more if it's bad, the more they blame their incumbent representative.
Yeah, you had mentioned airlines potentially having issues with their pricing, and if we can discuss who are the winners and losers, we had mentioned oil companies are most likely a winner. Another obvious sector that we've already seen movement in are the defense stocks. If missiles are going flying, they need to replace more missiles, and the defense stocks are happy to sell them. But one of the losers is most likely airlines. We'll see that long-term impact possibly if oil prices don't come back down. It is very possible that they will, but we might see them stay elevated for a long period of time. We won't be able to predict the future until the future happens.
Yeah, there's a Lockheed plant in my hometown. My dad used to work there when it was IBM, and they make cruise missile guidance control systems at that particular place and all kinds of things like that. That yeah, when they're using them up, then they will be getting overtime, and night shift manufacturing work and stuff like that. If this thing depletes the supplies significantly, which seems like a possibility. Another big question, of course, is when prices change and deficits potentially go up, there's going to be, we have to talk about interest rates. How is this going to move interest rates? The Fed is getting a new chairman pretty soon. Walsh was just officially nominated, so that changeover is coming soon. The Fed is looking to, the consensus rather is that there'd be another cut in a couple of months. Maybe probably not this time, but if we have prices going up more, that seems to reduce the likelihood of a Fed cut. And Jeremy, you told me that we saw a tick up in the 10-year rate earlier today.
We saw 10-year rates go up, which is interesting. Conventional immediate reaction for me was, well, if there's war, there should be a flight to safety, which means investors would buy bonds, which would push the yields of those bonds down. We saw bond yields go up, which we would expect bond yields to fall if bonds were being purchased in a flight to safety. So it seems like concerns around rate cuts not happening outweighed the flight to safety into longer-term treasury bonds. I think one of the analysts that I had listened to was discussing the expectations that's embedded in the markets, and originally it was 3 cuts this year, and I think now the expectation is 2 or less cuts this year. So that's definitely a large change just based off of this war and the potential impact it has on inflation.
My last point was about defense stocks rising and defense being a winner, but also the spending on defense could also have an inflationary effect in the way that the budget deficit could grow if the longer this thing wears on.
Well, there's certainly volatility. The VIX had a nice little spike. So volatility is there, fear is there in the markets. We saw the markets react and then recover a little bit. Honestly, there's not too much to do. Right now, we're watching the situation daily, and we might make small adjustments for our clients, but staying the course, doing nothing too drastic, and having a plan before crises like these happen is often the best, so that we aren't reacting to volatility out of fear. We're reacting to volatility out of looking for opportunities, or not reacting at all is oftentimes the best course of action.
Well, the U.S. remains the most able to recover from setbacks because we have the diversity and the size that is really a tremendous strength. And so I feel like this will pass and we'll come back from whatever the effects are. But again, I think the main takeaway, we're keeping an eye on it, and the longer this goes on, the more it will grow in importance.
Yeah, the U.S. is in a relatively good spot compared to the rest of the world. We're insulated from a lot of these oil risks since we're the largest producer in the world, and I think the big loser would be China. I think that was one of the geopolitical reasons this may have happened, where I think one of the statistics I had heard was 17% of China's oil comes from Venezuela or Iran. And Trump has now essentially cut off oil from those 2 states since China was one of the few places that was willing to buy from those regimes. It definitely could put a pinch on China. They have been building up their strategic reserves for quite a bit of time. So they might have a buffer, and I think their reserves are larger than the U.S.'s. But the U.S.'s are also more insulated from these risks. We're an ocean away with our own production and less consumption of oil relative. So
Hopefully, their response won't be to cut off our access to chips that are made in Asia.
Yeah, chips and various metal inputs that China dominates the refining for. That's
Mm-hmm.
one of the big concerns around, I think, Greenland and such, was trying to get more access to these rare earth metals. China definitely has quite a chokehold on some of these resources, and the U.S. has a chokehold on some of the other resources. And I guess that's what geopolitics is all about: the who
Mm-hmm.
has what the other person wants, and what can they get the other person to give up to get it.
Well, we'll do another talk on this if necessary in the future. And thanks for listening, everyone.
We'll keep you appraised if as the situation evolves, particularly around the impact of finances and what you can do about it.
Mm-hmm.
We'll talk to you next time.